Strategy has announced that they are going global with their Bitcoin-backed credit instruments, and this is a much bigger deal for Bitcoin than anybody realizes. I'm going to be talking about what this means for Strategy as well as the Bitcoin price, and these numbers are insane, so keep watching. But first, let's zoom out. I need you guys to picture the entire world bond market as a vast, slow-moving glacier of capital. There are $30.8 trillion that are locked inside European and Canadian debt. And Strategy has found a way to carve a channel straight through that ice and lets the liquidity flow straight into Bitcoin. We all know that Strategy has 4 US-based preferred equities. However, the company is going to be turning centuries-old sovereign curves into currency-native Bitcoin pipelines in various different global jurisdictions. You got to think of the pension funds, the insurers, the Canadian provinces, the German bond investors. All of them can now reach for a much higher coupon that will quietly stuff Bitcoin onto Strategy's balance sheet. So right now, they've already announced that they have been currently working on getting into Europe and Canada. So the $30.8 trillion in those two countries is the current prize pool. A bit of a spoiler alert, if you capture 0.1% of that capital pool, you will buy more than $30 billion of Bitcoin, which is enough to scoop up 280,000 Bitcoin, which is 8 weeks of global miner output. We all know that kind of flow is not a headline. That is what we call a supply shock. And this is how a single corporate treasury is bending the fixed income universe toward digital scarcity. The glacier is cracking, capital is moving, and Strategy is driving the flood into Bitcoin. So let's shift the spotlight to Europe first. The largest bond ocean outside of the United States, 27 trillion euros are sitting in sovereigns, agencies, and corporate paper, most of it drifting along at yields that barely beat inflation or even fall below inflation. For decades, pensions and insurers have accepted mediocrity because regulations box them into euro assets. And Strategy is literally going to have euro-denominated instruments. So the box is going to be pried open because it's in the same currency, the familiar settlement rails, and it's going to have a coupon that's backed by Bitcoin on top of the benchmark curve. Think about the German fixed income investors who want a way higher yields. Think about all the investors in France, the ones who want exposure to digital scarcity while their auditors are ticking every single compliance checkbox. This is what Strategy is working on in the background right now, and the scale is massive. Remember, a single basis point shift across this market redirects more capital into Bitcoin than an entire month of new Bitcoin miner supply. We know that Europe's bond glacier is thawing right now. Traditional yield seekers are going to have a bridge into Bitcoin that feels as mundane as buying a covered bond. Strategy is building that bridge, and the first heavy trucks are soon going to be lining up. So now if you cross the Atlantic and sprint north up into Canada, you can see that there are 6.1 trillion Canadian dollars resting in federal, provincial, municipal, and corporate debt. Canadian pensions and insurance funds are craving that extra yield juice that Strategy can provide because of their Bitcoin hoard, yet they are boxed into Canadian dollar assets by liability matching rules. And Strategy's Canadian denominated instruments are going to slip straight into the mandates that already exist. Same currency, same CDS settlement rails, 0 new compliance hurdles. They are ticking the boxes right now. So picture all of the teachers in Alberta, all of the hydro workers in Ontario, all of the nurses in Quebec. Their retirement dollars are already buying provincial bonds every single month. If you swap a sliver of that flow into Strategy credit, that is a vastly superior instrument with a much higher yield, with much more safety, each coupon payment unlocks more Bitcoin on Strategy's balance sheet. 1 basis point in Canada, moves 6 billion Canadian dollars, a 0.1% of allocation moves 34 billion Canadian dollars, enough to capture more Bitcoin than miners release in 2 whole months. Canada's bond buyers love yield and they trust credit structures, but Strategy will be handing them both, plus maybe an invisible call option on Bitcoin upside. So this could be the easiest trade that they'll ever be making. Now, before I get into the fun stuff, remember, this is not financial advice at all. This is financial entertainment. All I'm doing is breaking down the math of the fixed fixed income markets and what can happen to Strategy's Bitcoin holdings and what could happen to the Bitcoin price. So now it's time to get over to the capital flow scenarios because this is the fun stuff. Here is where the numbers hit like an asteroid. I want you to look at the first row right here, a 0.05% shift in the European and Canadian bonds. This is 1/20th of a single percent. That moves $15.4 billion, which would capture 140,000 Bitcoin. That alone at today's price captures 0.7% of all Bitcoin in existence. If you double that to a 0.10% allocation, that obviously becomes $30 billion, and that leads us to 280,000 Bitcoin acquired, which is 1.4% of the entire supply. And if you push that to 0.5% of the capital that is trapped in European and Canadian fixed income, that is 1.4 million Bitcoin acquired at today's price. Now I know the gears are starting to turn in your head. What is going to happen to the Bitcoin price with this level of bid? I know you might be asking, Adam, are people really going to be buying these instruments? Well, I don't know. They've already raised more than $6 billion worth already this year. And I'm of the opinion the best product always wins in the marketplace. That's only been the case for all of human history. Let's say one day they capture just 5% of that fixed income capital pool. That's enough capital to buy 14 million Bitcoin at today's price. When Michael Saylor says he's coming for the $300 trillion fixed income pool, I think that people are forgetting how big it actually is. The Bitcoin network is in what? The 2 trillions? The $300 trillion pool is 150x the size of the Bitcoin network. Even the smallest basis point adjustments crushes the new supply and lights a fuse under the Bitcoin price. And Strategy's currency native notes for these jurisdictions are gonna be the detonator. Now, I spent some time in ChatGPT o3 building a price sensitivity model with 3 great primary sources. So no, this is not hopium. I'm going to go over what this says and then I will show you what my sources are. So these are the inflows under capturing these bands of the European and Canadian fixed income markets. Let's assume that they capture 1% of that fixed income market, okay? My mid-case price, just based on the inflows from that one capital pool between those two jurisdictions, is a $264,000 Bitcoin price. My high case is putting that at $418,000. And obviously this is going to take some time because we need to educate the masses on digital credit, which is what I'm doing every day. But my mid case is putting it at $881,000 per Bitcoin and 1.6 million per Bitcoin. The bid that is going to be coming to Bitcoin because of this trapped low yielding capital is going to be explosive. So these are my sources, guys. This is the crypto multiplier from June 2023, looking at the daily BTC USD order flow data from 2014 to 2022. The structural liquidity model that separates free float from dormant coins, and what their key finding was, each $1 of net inflow raises Bitcoin's market cap 9 to 18x when the active float is less than 25% of supply. This research note from the NYDIG, their data set and method was they were tracking corporate treasury purchases versus BTC market cap response, and they found an empirical rule of thumb multiplier around a 10x, a $5 billion buy order historically added $50 billion to the market cap. And then there was this other quantity clearing demand model from a paper called Bitcoin Supply, Demand, and Price Dynamics that was calibrated to chain analysis of coin dormancy, which is showing the price elasticity implying an 11 to 22x cap increase per dollar of inflow when 70% of coins or higher are held long term. So if you take together the peer-reviewed modeling from the BIS, the academic journals, and real-world flow studies, you can converge on the conclusion that every new dollar of sustained net demand can add roughly $10 to $20 to Bitcoin's market cap in today's liquidity regime. And that's the basis for me using the 10x conservative and the 20x upper bound assumptions in that slide. So let's pull the lens back. Europe and Canada are giving Strategy a brand new hunting ground that is worth $30 trillion in bonds. Even the lightest touch of that capital is going to ignite demand that outstrips new Bitcoin supply for years. The investors are gonna win much fatter coupons, instant diversification, which they might love, and built-in Bitcoin upside if they have an instrument like Strike. So I know they're working on this in the background. It's confirmed, but they're going to price their initial tranches. They're going to launch their investor roadshows to sell these products. And then, of course, they're going to publish the yield comparisons, which is what they were doing on the earnings call. If you do that, every single euro and loonie raised is going to become spot Bitcoin on their balance sheet, driving up the price, deepening the Bitcoin black hole, and lifting BTC per share for every single shareholder in their room. The glacier of fixed income capital is creaking all across the world, and strategy is holding the pickaxe. They're going to swing it, and they're going to watch the flood of liquidity pour into Bitcoin. This is the most exciting time to be a Bitcoiner. This is what adoption looks like. If you want $1 million Bitcoin, the money has to come from somewhere. My name is Adam Livingston. I am the Bitcoin Wizard. I hope you enjoyed this content. If you want more daily incredible Bitcoin videos, subscribe to Swan Bitcoin today. And if you're watching this thinking that you want Bitcoin exposure before this shift happens, now is the time to do it the right way.